Why is Japan's largest investment banking group aggressively partnering with the issuer of USDC? Because they are quietly building the ultimate on-chain settlement infrastructure for massive institutional capital. Welcome to episode 87 of Japan Digital Asset Weekly. I'm Keisuke, CEO of Wakyodo and a venture partner at Ring Capital. Today, we are breaking down the monumental digital asset strategy of Nomura Holdings. Triggered by their recent strategic alliance with Circle, we will explore how Nomura is moving far beyond experimental sandboxes to completely dominate the institutional blockchain landscape in Japan. If you are a global founder aiming to tap into Japanese corporate capital, understanding Nomura's ecosystem is absolutely crucial. Let's start with the headline that is reshaping the market. On June 26, Nomura signed a memorandum of understanding with Circle. Their joint objective is to launch a USDC-based corporate payment and digital asset settlement service in Japan by 2027. This is a highly calculated move targeting a specific massive market, Japan's foreign exchange or FX sector, which sees roughly $440 billion traded daily. While other Japanese financial giants like SBI Group are focusing heavily on retail investors and building multi-token distribution platforms, Nomura's strategy is strictly institutional. By integrating USDC, multinational corporations and trading firms can bypass the traditional slow correspondent banking network. Cross-border payments and FX settlements that usually take days can now be executed seamlessly in a matter of minutes. Crucially, Nomura is not changing its core FX business model. They are simply using stablecoins as a tool to modernize the efficient backend plumbing. Nomura manages the strict regulatory compliance and corporate onboarding, while Circle provides the underlying blockchain infrastructure. Even before these stablecoin initiatives fully roll out, Nomura has already established complete dominance in the security token market. In 2019, Nomura co-founded BOOSTRY, a blockchain joint venture that operates the ibet for Fin network. With massive shareholders like SBI and the Japan Exchange Group, this network has become the de facto standard infrastructure for tokenizing real-world assets, or RWA, in Japan. The growth here is staggering. By early 2026, Japan's public security token market exploded to over 330 billion yen in cumulative issuance. Real estate-backed tokens dominate over 85% of this market, and the regional banks are rapidly joining as distributors to create a nationwide sales network. Nomura also recently completed the issuance of Japan's first tokenized venture capital fund using their J-Shapes scheme, completely automating the transfer of rights on the blockchain and cutting massive management costs. Furthermore, successful proof-of-concept trials for delivery versus payment with SMBC have shown that smart contracts can execute instant, simultaneous settlements of digital bonds without counterparty risk. To support this massive domestic infrastructure, Nomura has strategically built a global network of specialized subsidiaries. Based in Switzerland, Lizard Digital drives institutional asset management, pioneering a concept called hybrid finance. This strategy perfectly aligns with the new BIS capital rules by integrating programmable on-chain efficiency with traditional risk management. They recently launched a tokenized Bitcoin yield fund targeting a 5% additional return for institutional investors. Meanwhile, Komainu, a joint venture established by Nomura, operates as a world-class, highly regulated digital asset custodian. Komainu recently secured a $75 million investment from Blockstream to integrate the Liquid Network sidechain, expanding their capacity for secure, institutional-grade collateral management. Here's Wakyodo's take on Nomura's Masterplan for global blockchain infrastructure providers and asset managers. Nomura is not just a potential investor. They are the ultimate infrastructure partner in a market where obtaining your own licenses from the financial services agency can take years and massive capital. Trying to build an independent payment network from scratch is a losing strategy. The most efficient path to entering Japan is to plug into Nomura's established ecosystem, whether that means leveraging their upcoming USDC settlement rails or listing tokenized assets through BOOSTRY. However, partnering with an institution of Nomura's scale requires extremely credibility. In Japanese corporate culture, the golden rule is credibility before scale and adaptation before promotion. You need flawless cybersecurity and deep understanding of their consensus building process. If you're a global founder looking to navigate this complex landscape and secure strategic partnerships with Japanese financial titans, you need an experienced guide. Visit wakyodo.co.jp and ask about our Japan Lead as a service. We provide the cultural alignment and direct introductions you need to succeed. Thank you for watching and see you next Monday.